road a bit, isn't it? Could easily fall, but the peg can't really fall much. In other words, the growth in earnings that these companies have suggests that they're relatively undervalued. Now, this is going to be the problem with 2019. You're going to have on one side the possibility of things being awful, on the other side, things being an absolute possible rally. And I'll give you a classic example of this. This is from Bloomberg. The percentage of stocks making new 52-week lows on the New York Stock Exchange has skyrocketed. Well, does that mean that the market's going to continue lower, or does it mean, no, we've flattened out? If you've got a rocket, if you've got a record, rather, of companies which have made a one-year low, hey, maybe it's a great time to buy, right? So this is where we've got this indecision. We've got this problem of, well, which way do we go? And by the way, when it comes to Brexit, 57% of you think it's going to be a hard Brexit. Please tell me no. All right, let me reset that poll and give you the other one, which is, okay, this. Will the Dow be higher by the end of 2019? Like I'm telling you, at the moment, it's a difficult one to call. I actually think it will. I think it will. And I'll tell you why in a second, right? This is, again, the S&P 500 2-month, what's called peak to trough drawdowns. In other words, the highest it's been over any rolling 2-month period, right down to the lowest. All right. And we've had a pretty big, sharp fall. Now, it's not the sharpest fall we've had over December, because we've had a few other drops like this, and we're used to them, really, to be honest. Since, the last 10 years, we're used to these sharp falls, but it's comparable to some of those. What does that tell us? Well, to one sense, it tells us don't be panicked by these falls. You see what I'm saying? Can read it either way. In another sense, it tells us, oh my God, we should be bending over, grabbing our ankles. Now, here's one which is why I'm a little bit positive. This is, again, the forward price earnings multiple. It's by Goldman Sachs, okay, Global Investment Research. These are kind of things that come through my desk, came through last week. The Standard & Poor's valuation under their 3 scenarios. So this is the US markets. So where we are at the moment, all right, the price to earnings ratio is a measure of the valuation of companies. If companies go up to 18 times, which is what they peaked at this year in 2018, guess what? The S&P hits its all-time high again. If they stay, which is what Goldman Sachs' base case is, at where they are now, the market will just move a little bit upwards. And if they go down to the kinds of levels they easily can, which is 14, you'll see another sharp sell-off, and we'll lose probably another 15, 20% off the markets. Guess what? Goldman Sachs have just said, well, on the one hand, this, on the other hand, this, on the other hand, this. When the market's like this, and they're giving 3 bloody scenarios, you can see it on screen there. Is it going to go high, low, middle, whatever? That's when I want to turn even more so to trading.